let us go ahead and start with our first session for the second day of Money Conclave 2024, the real estates as an asset class, the current challenges and emerging avenues. So to empower you with that knowledge to navigate the future of real estate, this session is being moderated by a panel of expert speakers and moderated by Mr. Fariq Noushad, the former CEO of Greenikk and also a founding member of the Money Conclave 2024, the 3X founder of Foodtech, IT, Agricultural and Rural FinTech, the Tata Group Award winner for top 3 social entrepreneurs, patent holder for the sustainable product, and also a fundraising and M&A advisor. So he will be joining here with us in, yes, thank you so much, sir. Kindly do join with us. And joining with Mr. Fariq Noushad, we have the Managing Director and CEO of the TATA Realty, Mr. Sanjay Datt. Thank you so much, sir. And he is one man who believes and lives by the rule of being exceptional in whatever you do. And he is currently overseeing a 37 million square feet of residential and commercial development and management across 13 cities and 21 projects. We are so grateful to be having you here with us, sir. And the next person to be joining on this session is the head of the real estate for Google India, Mr. Ganesh Parameswaran. Thank you so much, sir, for being here with us. And we are so very grateful to be having this corporate real estate professional with over 20 years of rich hands-on experience. Thank you once again. And the last person to be joining on this session is Mr. Romil Dubey, the head advisory and transactions at CBRE. Thank you so much. So with that, I guess we shall start with the first session for the second day of Money Conclave 2024. And over to you, Fariq. Kindly take over.
Yes, so thanks, Daksha, for this great invitation. Just to kind of set the mood for the session. So Romil, Ganesh, Sanjay, I just wanted to share like a little pre-event story. So we did, before this pre-launch, we did a kind of kind of an interview across major 3 districts in Kerala to kind of understand what exactly are people investing in. So not surprisingly, maybe you would be expecting this. 7 out of 10 people told real estate as one of the most bold asset class which they would consider investing. And I think everyone would also agree to me on this. But there is a flip side to it. What we also understood is that real estate is something where people are very confident investing in. So primarily they don't need any further education is what I understood. Give anyone here 10 crores, they know where to invest, what to invest is primarily what. But there is also another side which people told about the returns, which is 2 to 3% rental yield, where the debt financing cost is around 8 to 12%. So that is a kind of background of this setting. So I would like to kind of start off by maybe, because out of all these careers that you guys could take, what put you into real estate as a career path? Was it accidental? Is there a story or motivation behind it? Maybe I can start with Sanjay on this.
Very good morning, everyone. It's absolute pleasure for me to be here and share my experiences. It was very early in my management program when I was having a conversation with my professor about my future. And the conversation took place that I want to be in the services sector. That was decision 1, which was my decision. The second decision I took about my career was that I want to be in a high margin business. Because back 35 years ago, there were only limited job opportunities that one could have. And I said, I don't want to sell soaps and shampoos. In other words, an FMCG company. I would like to be in high margin business. In high margin business, discussion took place with my professor, J.D. Singh, in the management program. And we joked. We said the first high margin business is arms dealing. So, as you know, many successful businessmen in India did arms dealing in those days, and they're very wealthy, by the way. And they're very rich. And I said, this is something which will not suit me because I can't do that. So we had a deliberation again. We realized that investment banking gives a lot of money, very high margin. And I realized that I'm not a banker. And this was back in 92 when we were discussing about Indian economy opening up. And we said, what about real estate? Real estate in those days to choose as a professional career was a bad choice. It was unorganized. It was not very respected. And there were no structured, organized avenues for you to be a real estate professional. But I took that call and I committed to real estate. And very quickly, I saw some success stories which gave me a very good idea that this probably is where my future lies. And I've never looked back since 92.
Thanks. That's super inspiring, Sanjay. Maybe Ganesh, what brought you into real estate?
Yeah, I think real estate chose me. I was joined as an executive assistant to a chairman of a IT firm, and I could go through his deals that he was doing. More than software business, he was doing more real estate, and that was making a lot of money. He was the main part of the software. Go acquire land and build IT parks, and then sell it off, or then still make money or renting out of it. Was really interesting. So I slowly stepped into it, and close to around 2008, I made a shift to ensure that I'm going to be in real estate. I was grossly undereducated to be on the real estate side. I thought it's very easy to be on the real estate side. And I still continue to learn from people like Sanjay, Samir and everybody, because it's like you said, investment into real estate is probably the only investment, probably along with gold, where your wealth is not eroded. Anywhere else, when you go for higher returns, high chance of your wealth getting eroded, right? I mean, it could be even stocks or anything like that. You would high chance of your wealth getting eroded. At least your baseline still remains, but it's of course a factor of market price and inflation and all those things along. Your returns might not be that good. Obviously, it's never a great decision if you're buying property for yourself on debt and trying to get returns out of it. You're never going to make money. But yeah, that's how my career started, and I've been with Fortune 10 companies for the past 12, 13 years now. And the dynamics is very, very different nowadays. In the last 3-4 years, the way that GCCs and large tech companies are coming into India and growing at the pace that they're growing, I think Romil can touch upon this, but we've had one of our best leasing years, 2024. I think it's going to beat any year that we have ever done. So investing in real estate still continues to be a very, very attractive proposition, and we will cover about other investments like REIT and other things later on.
Maybe Romil, you can go ahead.
So actually, I joined real estate in 2007, so much later than Sanjay sir, and he's truly one of the pioneers of our industry, our business. So it's an honor for me to sit with him in this podium. Even when I was joining real estate in 2007, it was still considered to be extremely unorganized. My parents were not excited about me picking up a job in real estate. IT was the in thing. And at that point in time, I got hired from my college. So this is the only job that I've ever done in my life, right? For the last 18 years, I've been with CBRE. People who were recruiting, they told us that this real estate is at a very nascent stage. This is going to be one of the fastest growing industry. And people like yourselves should look at it. And it was a story that I was ready to listen, I was ready to buy, and that's why I decided to join CBRE and real estate as a business. Even now, real estate, if you ask me, in India, is still at a very nascent stage, right? Our CEO keeps mentioning the stat that the total supply of commercial real estate in India is around a little less than 900 million square feet. A city like Tokyo alone has 1.3 billion square feet. So real estate in India is only going to grow. So anybody who's looking to invest in real estate as a career, as a business, I think the opportunities are still endless, right? And like Ganesh was mentioning, one of the safest investment classes, right? Value seldom gets eroded, right? So that's my story.
So thanks, Romil. So Ganesh, this is a crowd question, I would say. Yesterday, I was talking to a few folks. I was telling XX leaders are coming for a real estate discussion. The first question was that what does Google has to do with real estate? So because you're a search company, you're a technology company, right? So why this position inside Google for real estate? Maybe if you can touch upon that, would be great for the audience to know.
Okay, so Google in India close to has around 15 million square foot of space. That's for our offices predominantly, and we have started acquiring space for our data centers and warehouses for our various other businesses. So basically, our major real estate coverage is towards offices. So we lease offices. Probably 90% of our portfolio is leased. 10% is something that we own, but that's predominantly towards housing our engineers who would be working out of India as a tech talent. So India is not a cost center now. Of course, there is cost advantage in moving people from other countries to India, but at the same time, it's also a talent hub now. So the amount of talent we get in some of these cities is really startling. And I was sharing this with Fariq last week when we were speaking, is that almost for every one position, we get close to 4 engineers in Bangalore. It's probably around 3.6, 3.7 in Hyderabad, and then Pune goes to 2 and then it's 1.8. But these talents are not locally present in those. Everybody is an immigrant. They would have moved from Kerala, they would have moved from Tamil Nadu, they would have moved from other cities into these places. Currently, green pastures happening here, but we continue to grow in one of those top cities like Bangalore, Hyderabad, Gurgaon, and Mumbai, where we see talent coming towards engineering, sales, financial services, and stuff like that. So majorly, that's why we are not a real estate company which does search. We are a search company which has a small real estate division.
So you have data centers is also a very separate wing, right? I mean, you pick up, that also comes under your portfolio of real estate.
Not under mine, but there's a separate data center team because the economics of the data center and warehousing is completely different. I manage only office and retail portions.
Thanks, Ganesh. So, guys, I'm just using 2 words in Malayalam. I'll translate definitely. So, എനിക്കൊരു question. I mean, maybe we'll come to you guys also. അതായത് നമുക്ക് എല്ലാവർക്കും റിയൽ എസ്റ്റേറ്റ് എന്ന് പറഞ്ഞത് ഫാമിലി ഇൻഹെറിറ്റഡ് ആയിട്ടോ മേ ബി നിങ്ങൾക്കൊരു ലാൻഡ് ഉണ്ടാവാം, അല്ലെങ്കിൽ ചിലപ്പോൾ നിങ്ങളുടെ കമ്പൈൻഡ് ആയിട്ടൊരു ഫാമിലി ലാൻഡ് നിങ്ങൾ സെല്ല് ചെയ്ത് നിങ്ങൾക്കൊരു ഷെയർ മേ ബി 2 crores 5 crores എന്നീ എക്സ് എമൗണ്ട് കിട്ടുമായിരിക്കാം. പക്ഷേ ഇത് നമ്മൾ തിരിച്ച് ഇൻവെസ്റ്റ് ചെയ്യുമ്പോൾ ഞാൻ ഇവരോട് ചോദിക്കാൻ ഉദ്ദേശിക്കുന്ന ക്വസ്റ്റ്യൻ, അതായത് നമുക്ക് അങ്ങനെ ഒരു ഓപ്പർച്യൂണിറ്റി കിട്ടി. ഫോർ നിങ്ങൾക്ക് ഒരു ലാൻഡ് ഉണ്ട് ഒരു പ്രൈം ഏരിയയിൽ, അതിൽ നിങ്ങൾ എന്ത് ചെയ്യണം? മേ ബി ഒരു അസറ്റ് ഹോംസ് വന്നിട്ട് നിങ്ങളുടെ അടുത്ത് ഒരു JV ഓപ്പർച്യൂണിറ്റി ചോദിക്കുകയാണ്, അത് അക്സെപ്റ്റ് ചെയ്യണോ? അതോ നിങ്ങൾക്ക് തന്നെ ബാങ്കിൽ ലോൺ ഇട്ട് നിങ്ങൾക്ക് തന്നെ ബിൽഡ് ചെയ്യാൻ പറ്റുമോ? സോ ഇങ്ങനത്തെ ഒരു ക്വസ്റ്റ്യൻ ആണ് ഐ എം തിങ്കിങ് ടു ആസ്ക്, ബട്ട് വിൽ ജസ്റ്റ് ട്രാൻസ്ലേറ്റ് ഫോർ ദം. സോ തിങ് ഇസ് സഞ്ജയ് സർ, വി ജസ്റ്റ് വാണ്ട് ടു നോ, let's say a 25-year-old entrepreneur, or let's say anyone in that age bracket got a inheritance some way of, let's say, X crores, let's say 10 crores. What do you think? Or let's say they have access to a land which has value of 10 crores. What do you think is the right step they should take getting into real estate as a first time, or maybe has some background as a family? What do you think is the right way forward, and what do you think are the risks and rewards of both? Let's say, should they land bank? Should they do a JV with a tier 1 developer locally? Or should they build something, take a loan, do a service apartment, build a commercial office space? So what do you think should be the right step? I don't know, there is no right or wrong, but what should be the stages they should think before taking a decision?
It's a big question. I'll try and simplify in 2 ways. Let's assume that you have a 25-year-old who doesn't have the money. You touched on having money. Let's say doesn't have the money. Real estate is the best option for you because if you're a salaried person or if you have little income, you can use real estate leverage, which means you can take a home loan and pay for the house and put little money from your side It is called wealth creation. What you do with it is as you prepay your loan, you invest more because your income is small. But with small income, you can build a portfolio. You will see rise in capital value of the property. At a certain stage of your life, let's say at the age of 35 or 40, you sell this real estate, create this 10 crores as an example, and then at that point of time, take a decision what you want to do. Do you want income? Do you want to create more wealth? Multiply, let's say, that 10 crore rupees into 20 crores and 30 crores? Or you want to become an entrepreneur and become a high net worth investor in real estate and make real estate as a business? So buying a property is creating wealth, but if you create a real estate company, it is creating wealth for the property, and also it is creating a business opportunity for you. You make a company. So your company value will become much more in an organized world if you buy a real estate development company. Suppose a real estate development company does a listing at Bombay Stock Exchange. You get nearly 20% of the EBITDA, which is the earnings before income tax, right? 20% of that is the enterprise value. So you can actually have 10 to 12% conservatively if you create a company beside real estate. That's one direction. The second direction is that you can actually, let's look at a simple answer for all of you. You have choices. Buy in land, buy in commercial, which gives you 7 to 8% net yield, or buy in residential, which gives you 2% rental yield, but it also gives you 4% conservatively capital appreciation. So the blended average of the return is 6% or 7%. And because you have raised loan, it is not your money. So your return on investment on your original capital is even much higher because it's not your money, it is the bank's money, right? So you can look at this way, or you can buy new segment classes like industrial and warehousing, land, of course. I want to very quickly tell you that real estate is for the visionaries. You have to have a foresight, a line of sight for next 10 years of what is happening in the city where you want to invest. Or in the other cities, a lot of people you buy in Dubai, what is the return and vision of that city versus the city that you want to invest? You need to compare. So you need to be a visionary. And that vision is dependent on job growth, infrastructure of the city, economy booming or not. So you need to know next 10 years what's going to happen. If you buy a land where you know it's going to be a highway connectivity or a metro connectivity, but you buy today and that infrastructure comes 7 or 10 years from now, the land value will be 1x today, it'll be 5x later. So you can use various strategies. The reason why real estate is so big is real estate is the underlying for every business. Let's say airport. We're sitting in this infrastructure because of airport. Airport is what? Real estate. You go to hospitals, the underlying infrastructure is real estate. Warehousing is real estate. Hotels are real estate, by the way. Retail outlets, the McDonald's of the world, they all are real estate. So it's such a vast subject that every opportunity is available to you too. But you need to do a little bit of homework of what it will be like a few years from now. The last concept as an investor for you is called risk appetite. So we all have different styles. If you are conservative, you want rental income, then you don't buy in land. If you buy in land and if you don't know what can be built on this and how will you protect the land, because land can be encroached, land can be possessed by somebody, the risk is high, but the return is also higher. So it depends on your risk appetite, and the term that we use is risk-adjusted return. Depending on how much risk you're willing to take, that much return that you can go. I have a unique theory which went viral in a conference like this in Mumbai. And somebody was asking about Mumbai. Why the residential apartment in Mumbai is 1 lakh rupees per square feet. And I instantly said, the worse the infrastructure, higher the values of real estate. Now this is very ironic. How can the worst infrastructure lead to higher prices? The scale and the growth of the economy in many cities in India is so high that the infrastructure is not able to catch up. The chances of your wealth multiplying is higher because people will pay a premium to be in a nice and a good location where the infrastructure is good, and therefore they pay a price. So it's a very interesting theory. Think about it, how you want to apply it.
Sure. Thanks, Sanjay, for those beautiful insights. So I think നമ്മൾ പൊതുവേ വരുന്നൊരു കാര്യം വീട് റെൻറ്റ് ചെയ്യണോ വാങ്ങിക്കണോ, ഈ ഒരു റെൻറ്റ് വെസസ് ബൈ ഒരുപാട് യൂട്യൂബ് ഇതിലൊക്കെ പോയൊരു സംഭവമാണ്. അപ്പോൾ അതിലിപ്പോൾ യൂഷ്വലി നമ്മൾ മലയാളികൾ പൊതുവേ നമുക്ക് വാട്ട് വി ഡു ഇസ് നമുക്ക് എല്ലാവർക്കും വീട്ടിൽ ഇവിടെ ഒരു എന്തായാലും ഒരു അസറ്റ് ഉണ്ടാവും. വി വിൽ ഹാവ് എ ഹോം. ഇവിടെ നമ്മൾ ചിലപ്പോൾ മൈഗ്രേറ്റ് ചെയ്ത് ചിലപ്പോൾ ദുബായ് പോവാം, ബാംഗ്ലൂർ പോവാം, മുംബൈ പോവാം, ചെന്നൈ പോവാം. അവിടെ എല്ലാം പോയിട്ട് സെറ്റിൽ ചെയ്യാൻ തീരുമാനിച്ചാൽ, ഓർ ഈവൻ ബിഫോർ തിങ്കിങ് അവിടെ തന്നെയാണോ ജോബ് എന്ന് അറിയുന്നതിന് മുന്നേ ചെന്ന് 1 വർഷം കഴിഞ്ഞ് 2 വർഷം കഴിഞ്ഞ് അപ്പം തന്നെ ഒരു EMI എടുത്ത് ഒരു വീട് മേടിക്കുക എന്നുള്ളൊരു കോൺസെപ്റ്റ് ഉണ്ട്. ഇപ്പോൾ 2 lakhs 3 lakhs സാലറി ചിലപ്പോൾ അവിടുത്തെ IT എഞ്ചിനീയേഴ്സിനുണ്ടാവും. ഇതൊരു ആൻഡ് ദേ ഗെറ്റ് ഇൻ എ ട്രാപ്പ് ഓഫ് 85,000-90,000 EMI ദെയർ. അവിടെ ചിലപ്പോൾ അടുത്ത ട്രാൻസ്ഫർ വേറെ അങ്ങോട്ടുള്ളായിരിക്കും. സോ ഈ ഒരു കോൺസെപ്റ്റ് ഇസ് യൂഷ്വലി ഒരു കൈൻഡ് ഓഫ് തോട്ട്. മേ ബി ലാസ്റ്റ് ദാറ്റ്. സോ Romil, ജസ്റ്റ് വാണ്ടഡ് ടു if you can, because there is this concept of rent versus buy that you understand, because here people when they migrate to a tier 1 city and let's say they have decided to live there, what happens is that even before knowing whether their next 15-20 years is there, they primarily look at getting a EMI there and buy a second home there, and they get stuck. And in Bangalore, etc., as you know, you live in Yelahanka, you cannot go to HSR for your next job. So what is your concept of rent versus buy? I think what are the dynamics which people should think before taking a decision if they already have a home? Maybe if you can touch upon that would be.
Sure. So obviously the way I look at buying a house is not purely an investment decision. It's also an emotional decision at times, right? Because typically Indians, no matter which part of country we are from, we want to own our houses, right? So another concept is you can't purely look at residential investment as return yielding, because sometimes you'll end up staying there. And like Sanjay sir was mentioning, because you need to bring in only 20% margin money in cases, right? You have to look at the yield from what you have initially put in. And then you also equate with the kind of rent that you are paying now versus the kind of rent that you'll pay, say 5-6 years down the line. The rental values in a lot of large metros have multiplied over the years. Like in the morning today, Ganesh was mentioning that 7 years back when he moved to Hyderabad, he picked up a 3,000 square feet house and he was paying 30,000 rupees rent, right? Today, a 1,500 square feet house in the same locality comes at 70,000 rupees rent. So somebody who wants to make sure that they have a stabilized cash outflow will probably end up buying and owning, right? And it's not just the rental yield that you look at. There is a substantial capital appreciation also that you can get. And typically residential apartments are fairly liquid as well, right? if you pick up the right location in a right community, you are able to flip it without too much of inconvenience. Obviously, there is a transaction cost, but it's you have to equate between both the emotional angle as well as the financial angle when you are looking to buy a residential real estate.
Fariq, I have just one to add.
Yes, please.
So, if you talk about our generation, which is probably in their late 30s, mid 40s, the biggest generational wealth we are inheriting is old properties, right? Old lands. And I was talking to an investor and he was saying that most of the people who have done their children's higher education abroad or their marriages or taken some big family decisions or bought a bigger house, all have happened because they sold their old ancestral house or they sold their old land that they bought at some point of time. Like my father picked up a small property, 600 square feet, 64,000 rupees, probably in 1983, and sold at like some 70 lakhs when he passed away, and then that was distributed for us to go and invest. So currently and for many generations across multiple economies and generations, real estate has been the best asset, most reliable asset class to be able to take it forward. Today there are a lot of opinions on multiple social media platforms for faster returns and stuff like that. But if you want to put money and forget about it for like 15, 20 years and then go back, then you will see the capital appreciation. The appreciation multiplies every 5 years as well. There is probably an annual escalation, but every 5 years there is a jump to that appreciation as well, which nobody today factors.
Sure, thanks Ganesh. എനിക്ക് ജസ്റ്റ് ഒരു ക്വസ്റ്റ്യൻ, എത്ര പേര് റീറ്റ് എന്ന് പറഞ്ഞൊരു കോൺസെപ്റ്റ് കേട്ടിട്ടുണ്ട്? റിയൽ എസ്റ്റേറ്റ് ഇൻവെസ്റ്റ്മെൻറ്റ് ട്രസ്റ്റ് അഥവാ സ്മോൾ മീഡിയം റിയൽ എസ്റ്റേറ്റ് ഇൻവെസ്റ്റ്മെൻറ്റ് ട്രസ്റ്റ് എത്ര പേര് കേട്ടിട്ടുണ്ട്? ജസ്റ്റ് ഒന്ന്. Okay, thanks. So you can see, so probably I think Ganesh and Sanjay, if you can touch upon, so അതായത് എനിക്കൊരു കോൺസെപ്റ്റ് പറയാനുള്ളത്, നമ്മൾ മ്യൂച്വൽ ഫണ്ടിൽ നമ്മൾ സ്റ്റോക്ക് മാർക്കറ്റിൽ പൈസ ഇടുന്ന പോലെ നമുക്ക് റിയൽ എസ്റ്റേറ്റിനും അങ്ങനെ പൈസ ഇടാം. നമുക്ക് പർട്ടിക്കുലർലി പോയി ആ സ്ഥലം ഓൺ ചെയ്യുകയോ അല്ലെങ്കിൽ അതിൻ്റെ ഓപ്പറേഷൻസ് നോക്കണം എന്നൊരു കോൺസെപ്റ്റ് ഇല്ല. നമുക്ക് അങ്ങനത്തെ ഒരു കോൺസെപ്റ്റാണ് ഈ റീറ്റ് എന്ന് പറയുന്നത്. മേ ബി ദേ വിൽ ടോക്ക്. ഐ തിങ്ക് ഗണേഷ്, ഇഫ് യു ക്യാൻ ടച്ച് അപ്പോൺ വാട്ട് എക്സാക്ട്ലി റീറ്റ് ഇസ്, how is it different from owning a land, buying 5 crores, buying a property? How is it different? How can you invest? Maybe some things about that. Maybe both Ganesh and Sanjay, if you can take turn by turn. And
Yeah, I'm still not as expert as Sanjay on this one, but I would just probably touch a little bit. I don't think everybody has the appetite to do large scale investments. For example, if you have to buy just a floor in Hyderabad in a, let's say, 30,000 square foot, you would still require close to $2.5 million or more to be able to buy it in a, I would say, semi-premium hire. So we don't know, nobody has 20-30 crores readily available for them to invest, and it becomes very unviable for them to invest. So REIT is a simple concept where it's you can buy shares of it, smaller portions. You can invest as low as one share, which could be currently some of the REITs are trading anywhere between 200 to 400, 500 bucks today. There are 4 active REITs in the market, and then you can just buy one share of it. Based on the rental revenues, you continue to get returns. Of course, the REIT prices, like stock market, is also listed in the stock exchange. You don't have to do fragmented ownership. So there are 2 major constraints that the real estate market went through. There are people who are buying 500, 600 square feet of space directly from a builder. And that means that in a building, we will have 400, 500 landlords, and an occupant to come and deal with 400, 500 different landlords is going to be impossible. So currently, the REIT gives a proper structure to it where the builder themselves can list the property or bundle multiple properties and list it, and then you can buy, it gets listed on the stock exchange, you can buy those shares. Of course, there are various classifications of REITs. There's a rental REIT, there's a mortgage REIT, there are hybrid REITs. But for a simple thing, you just legitimately buy a portion of the asset, which is a rent yielding property, and then you are able to invest into it. And then, of course, it also puts pressure on developers, because initially everybody thought it was a way out, that people are just going to exit like an IPO, just put a REIT and go. But today, the REITs and the associations around it and the regulations around it are very strong, that it is the responsibility of the developer or the REIT trust that's going to operate is ensure that the rental incomes are constantly coming in. Just for you to know what REIT is, it is Real Estate Investment Trust. That's a regulatory body that works under SEBI to be able to fragment these ownerships and we can buy them. So I'll leave it to you.
Yeah, no, very simply put, you have a choice to buy a property and rent, or you have a choice to have a rented property, which is also well managed by a team of professionals. And then the most important part, like Ganesh also mentioned, it's regulated by the Government of India, which means Stock Exchange Board of India will ensure that when you pick up a unit in a REIT listed, right now between three REITs, which is Embassy REIT, Mindspace REIT, and Brookfield REIT, roughly about 200 million square feet of office, leased office, is listed. I expect another 300 million square feet. The largest REIT is just around the corner by Blackstone and Solarpuria, which will hit the market for all of you. And I think it will be followed by many other developers in the country. So out of 900 million square feet of office space, which Romil talked about, 50 to 60% of that portfolio will be REITed. So that as an opportunity for you is available. And you don't have to manage the property, you don't have to chase the broker, you don't have to worry about whether I'm paying the bill, paying the taxes. All that headache is removed. More importantly, the property today may not be attractive property tomorrow. So these professionals who manage the REIT, they invest in the property to keep it appealing. So during COVID, a lot of properties were discarded because they were not really meeting the standards of such as Google is looking for. But these REITs manage the properties for you better. So the risk is reduced, it is regulated, you get the value appreciation of the property just the way that you will own the property. Except for physical touch and feel, you will get a very handsome return from it. So I would encourage, I personally own REIT and I'm quite happy.
So Sanjay, if you can touch upon the small medium which has come up now.
So there was a business called fractional ownership, which basically meant one buyer bringing multiple small properties and taking money from investors in renting those. Now, Stock Exchange Board of India realized that they are not regulated and many investors are buying these small properties. And they're also at risk if there is a fraud or if it's not managed properly. So SEBI again came back with small and medium REIT, SM REIT. Small and medium REIT is 50 crore rupees of investment to 500 crore rupees of investment. So if any one of you have some property and certain friend of yours have property valued at 50 crores, which is generating rent, whether it is residential. So office REIT is mostly office, but SM REIT gives you the flexibility of residential rented property, industrial, commercial, anything which is generating rent. So you can form a company of your own if the property value is 50 crores. And you will make 2.5% as fee for managing the property as a manager of the SM REIT. So there is one opportunity that you can become an entrepreneur if 50 crore worth of property is there with you. So not just property, but a company can be formed, which later you can grow up to 500 crores. So you actually can build a portfolio of investments as well as an opportunity to become an entrepreneur through SM REIT. And again, if you're an investor, the Government of India is regulating and making sure that your investment is safe.
So, yeah, please, Rom.
One of the things that I would like to add as far as REITs are concerned is it's a very stable investment vehicle, right? The returns are more or less fairly secured like any other real estate investment asset. The advantage that a REIT has is the exit is fairly easy. Now today, if you own commercial real estate and you want to monetize it, selling it, no matter what the size is a taxing thing, right? With REITs, you can trade it on the stock exchange, so it brings in a lot of flexibility, especially for the smaller investors, right? So, and like Sanjay sir and Ganesh were mentioning, you can start with like say 10,000 rupees also if you want to enter commercial real estate. So it's a good segment to invest in apart from your equities and mutual funds. So and especially for people who are looking at stable returns over a period of time.
I think the real estate market is growing about 36% year over year, much more promised by many mutual fund companies now. So I think it's not a bad investment to put it in, but you have to have patience in doing it because office market is growing. We were a sub-dollar market for a very long time. Today we are just going above the dollar, and we would end up at $2 probably in the next 5 years, which will be still lower than the world. And then I think we would still have a lot of regulation around real estate.
There is one thing which I find very attractive about real estate. You see, when you buy a property, below that property is a land, and land is appreciating. So today, if you buy a property 10 kilometers from here, it will be considered very far. But in 10 years' time, that location will become very prime, it will become very inside, which you all know in your respective cities. Second, today the construction is allowed up to certain area. So we call it FSI. You can build on 1 square feet, 3 square feet, or 4 square feet, etc., etc. I'm simplifying
just,
it.
Sanjay, can you say what is FSI? What does it mean?
Floor space index or floor area ratio. The government decides how much can you build on the land, right? But it is my belief that in the times to come, you can build more. So if you own the land today you may be able to build 3, but in the times to come, you can build 6 times, 7 times. And in the times to come, the land value will also appreciate. So your return after 10, 15 years can be much higher if you have the appetite and ability to hold the land. So you should keep that in mind, because even in the office, today it is an office building, but tomorrow that building can be demolished and rebuilt twice the size, and your 1 unit can become 2 unit or 3 unit in that property. You know.
Thanks, sir. So I think one major takeaway is that we usually our friends എല്ലാവരും കൂടെ ചേർന്നിട്ട് അല്ലെങ്കിൽ നിങ്ങളുടെ റിലേറ്റീവ്സ് വന്നിട്ട് പറയും നമുക്കൊരു കൺസ്ട്രക്ഷൻ ചെയ്യണം 30 crores ഒരു പ്രോപ്പർട്ടിയാണ് നിങ്ങൾ 10 ലക്ഷം രൂപയുടെ ഇതൊരു യൂഷ്വൽ കോൺസെപ്റ്റ് ആണ്. അതാണ് ഈ പറഞ്ഞ യൂഷ്വലി ഇപ്പം ദേ ഓൾ ടോൾഡ് അബൌട്ട് ഫ്രാക്ഷണൽ ഓണർഷിപ്പ്. ഇത് ഭയങ്കര അൺഓർഗനൈസ്ഡ് ആണ്. ഇതിലെല്ലാവരും പോയി എനിക്കറിയുന്ന ആൾക്കാർ തന്നെ പോയി കാശ് ഇട്ടിട്ടുണ്ട്, എന്നിട്ട് സ്റ്റക്കായിട്ട് ദേ കനോട്ട് ടേക്ക് ദ മണി ബാക്ക്. സോ ഇതൊരു ഭയങ്കര കോമൺ നോമാണ്. അപ്പോൾ അതിന് പകരമാണ് ഈ പറഞ്ഞ പോലെ റീറ്റ് ആൻഡ് SM REIT. ഐ മീൻ വെൻ ഓൾ ഓഫ് യു ഗെറ്റ് ടൈം പ്ലീസ് അതിനെക്കുറിച്ചൊന്ന് റിസർച്ച് ചെയ്യണം. ഭയങ്കര സേഫാണ്. ഇറ്റ് സെബി കൺട്രോൾഡ്. ഇപ്പോൾ നിങ്ങളുടെ കാശ് പോകുന്നതിന് കറക്റ്റായിട്ടുള്ള അതിൻ്റെ റിട്ടേൺസ് ക്രൈറ്റീരിയ, ദ ബിൽഡിങ്സ് ആർ വെരിഫൈഡ്, ഇറ്റ് ഈസ് ഓൺഡ് ബൈ നല്ല ജയൻസ്, റിയൽ എസ്റ്റേറ്റ് ജയൻസ്, അല്ലെങ്കിൽ അവർ നല്ല കോർപ്പറേറ്റ് ലീസസ് ആണ് അവർ കൊടുക്കുന്നത്. ഇറ്റ്സ് മാനേജ്ഡ് വെൽ. ആൻഡ് നിങ്ങൾക്ക് ഒരു എഫേർട്ടും എടുക്കണ്ട. ഇപ്പോൾ സാറ് നിങ്ങൾ കാശ് കൊടുത്തിട്ട് പോയി നിങ്ങൾ അവരോട് ചോദിക്കണം കൺസ്ട്രക്ഷൻ ആയോ, എത്രയായി കോസ്റ്റ്. ട്രാൻസ്പെറൻസി ഇഷ്യൂസ് ഉണ്ട്. അത് അവർ സിമെൻറ്റിൻ്റെ വാല്യൂ കൂട്ടിയിട്ട് അവർ അതിൻ്റെ മാർജിൻ ദേ വിൽ മേക്ക് മണി, ബട്ട് വാട്ട് അബൌട്ട് യുവർ മണി? സോ ഇങ്ങനത്തെ കാര്യങ്ങൾ യു ഷുഡ് മേ ബി ലിറ്റിൽ തിങ്ക് ഇസ് വാട്ട് ഐ അണ്ടർസ്റ്റുഡ്. ഞാൻ ഐ വിൽ ടേക്ക് 1 or 2 questions ഫ്രം ദ ഓഡിയൻസ് പ്ലീസ്. റിയൽ എസ്റ്റേറ്റിനെ കുറിച്ച് എന്തും വാട്ട് എവർ യു ഫീൽ, ഇഫ് സമ്മൺ ക്യാൻ. യാ,
Hello. Hi, myself is Jasili, international trainer in AI. I would like to ask my question to Mr. Romil. Okay. So my question is, mostly I have not seen many people talking about getting education in the field of real estate. So for youngsters, how they can study about the real estate, the basics, also what all things we have to learn before investing in the field of real estate. That's my first question. Secondly, can you suggest some step-by-step approach that a youngster have to follow before investing if they don't have money to invest? So please.
So, education in terms of career or education in terms of investing?
Investing.
Okay, so obviously there are these small courses now that you can actually do or refer to. There are institutions like RICS, etc., who actually do these small courses where they can teach you about real estate as an investment asset, also other alternative investment assets. So one of the first things that we need to focus on is understanding the business itself, right? So real estate, like all of us were mentioning, is fairly stable, right? So and like Sanjay sir was mentioning, you have to understand what will be the ultimate use of the real estate. Now, every business, no matter what business you are doing, you will need real estate. You might be a retailer, you might be an IT company or a hotelier, right? Anything and everything that you do, you end up needing real estate, right? So, obviously, before you are investing, you have to understand what is going to be the use of this piece of real estate, because the value is obviously derived from the income that can be generated. Now, piece of land which was used for, say, paddy cultivation will only fetch you an X amount of returns. But on that same piece of land, you end up making a hotel. It will become a different ball game altogether, right? Now, again, if you construct an office building, it could even yield you more yield, right? Like Sanjay sir was mentioning about things like FSI, right? It is extremely important to understand the local rules, the local laws, regulations, what the local municipal authorities allow you to do in a particular piece of land or real estate. Now, if you are only allowed to construct, say, a ground plus 2-story building in a particular location, your returns could completely change vis-a-vis you getting allowed to do a ground plus 4. Now, it was like in a city like Hyderabad, there is no restriction on FSI. So a lot of these old buildings are now getting demolished and they're doing buildings 5 times the size of what was done initially. So it's extremely important to understand the local laws, the local regulations if you're investing in land. As far as housing is concerned, there are rules like RERA now, which has actually simplified or actually made residential investment in apartments a little less risky or risk-free, because there is a certain amount of process and due diligence that the developer has to go through before they can actually bring a project out in the public. So these things are extremely important. But actually the most important thing for any real estate investor to understand is what will that particular piece of land or building will be used for ultimately. Now a shop can give you a certain amount of rent, whereas suppose a company like Google rents the space, they can give you a completely different rent. Just by a company like Google coming in an area, the value of real estate goes up. So for you to understand all these things, it actually takes a little while, and but it's not that difficult. But I think the most important thing for any investor to understand is what can you do with a particular piece of land or building or whatever we are looking at. I hope I've answered your question.
Follow the infrastructure as well. So the city's infrastructure or the area's infrastructure is also pretty important, right? And it could be metro projects, it could be other developments of IT parks coming up or other kind of high streets getting developed is also very important for you to know. In India, land is little complicated, and Sanjay can touch over because titles and litigations are plenty when you touch land. It's a ghost by itself. Many large companies like Tata themselves find it difficult to do due diligence on land because there is usually some litigation or encroachment, or it's near less than 500 meters of a lake. So there are a lot of other things that you have to look at. And that's why something like a REIT makes very simple easy choice for you to go and do it, because all this background work and difficulty is already done up to the point that a rental income is already being generated. You have to just go buy your share out of it. But if you want to make, like Romil said, if you really want to make your own investment, you will have to definitely ensure that your legal and compliance teams are also pretty well done, and you don't buy over a valuation. You have to do proper valuation, and that's where something like a RICS or Coronets who provide these kind of courses for you to go through valuation will help you do it. Because sometimes people buy assets, like in Hyderabad he's talking about, it's an inflated market. You would rather keep the money in the bank than go and buy something today, because the market is in a bubble today, right? If the bubble hits, then it'll normalize, but not that you're going to lose your money, it's just going to normalize. So it's for you to see what the valuation is there. So of course RERA and other things will help you to regulate some of these things, but I think it's always better to know the valuation and the compliances around when you're doing your own investment.
Thank you so much.
Yeah, very quickly to summarize exactly what Romil and Ganesh said. Every city has a development control book. So just pick up the book. It's available at any shop. Development control book is step one. That will decide what can be built on land. Second is you need to understand legal, like Ganesh already mentioned. Third, you need to understand how to calculate return on your investment. Now, normally people calculate the return on investment as a gross income. But the third bucket is taxation. You should know taxes in real estate to really crack the net return on investment, right? So these three steps are fundamentals to this, and then you can have more advanced stages of your real estate investment education.
Who's next? Yeah, please.
Hi, Sanjay and Romil. This is regarding the domestic market versus international market. The real estate has people are changing their portfolios nowadays to international market. Okay, when comparing to domestic market and international market with the global exposure, where the ROI has been going from 8 to 9%, 10% on that scale, and when you talk about the domestic market, it's consistent of 2 to 3%. So now the trend has been changed in Indian market. When you see the pricing in Mumbai and the cities like Bangalore, the money which they want to invest in Mumbai or the cities like Bangalore, they can have multiple portfolios in outside of India, and it's growing up actually. So what's your thought about that, domestic versus international real estate market?
I'm a firm believer in domestic market. Two things: you understand the law of land. Second, you can manage your investment. I'm not saying that you cannot manage in Dubai or London. You can. And those markets are also very mature and regulated. But I believe that India as a country will have much more growth than you have seen so far. And I'm convinced, something I would like to tell the audience: don't dream small. Dream big. Because if you're not dreaming big, you will never make money. And the opportunity in India, Ganesh said it so many times, is so vast that you will never get this opportunity anywhere in the world. This much, at least in real estate point of view. And from equity markets point of view, I can say with conviction.
Sanjay, just one thing. Sorry, Romil. Because what I can touch upon is that the global commercial, for example, the international market, because Dubai people, they come and host a lot of events here telling 8-9% claims. But whereas in India, still, see, there is no claims as it, but at least we know that RESI stands between 2 to 3% or 4%. So how can one plan those dynamics? What is your thought?
So I feel, I mentioned earlier, risk-adjusted return. Risk in here are lower. Yeah. So 8% in Dubai versus 6 in India, I think 6 is better. It's less risk. And we can have an argument on this Dubai and India fight.
Now, I just want to tell you, the registration cost over here versus Dubai registration cost is totally different. The lending rate, debt lending rate is totally different.
I totally agree with you. But you need to keep in mind that Dubai is a speculator's market, investor's market. Even Emaar from Dubai wants to build in India. Why? So you need to keep that in mind. And I'm talking about long term. Short term, you can go and invest anywhere in the world, and you'll make money. And Dubai is a good choice.
So we have 1.5 billion people, right? That is a huge population, right? With a lot of people still not owning real estate. So obviously the demand will be huge in the years to come. Also, you have to understand that India and probably some parts of Middle East are the only places which are actually seeing real growth at this point in time. And there are not many markets where the GDP is actually growing like the way it is growing in India. In fact, this year has been the best year for commercial real estate in this country. Even for a city like Kochi, which is still considerably smaller compared to some of the other larger metros, Kochi for the first time has seen a gross absorption of more than 1 million square feet. It was always around 500, 600,000 square feet. This year, the absorption of commercial real estate in Kochi is 1.5 million, which is almost three times of what it was last year. So the demand for end use in India is huge. Most of the global companies are trying to set up shops here. So when jobs are coming, and real estate is a cycle, when job gets created, there will be a demand for residential. When houses come in, there will be a demand for retail, hotels, schools. So it's a cycle. And the cycle which initiates this, the activity which initiates this cycle is job creation. And I think today, thanks to the ITS and the outsourcing industry, the job creation cycle in India is at an all-time high. And we, being as part of the real estate industry, can tell you that things are looking extremely good for the next at least 3 to 5 years. So
even non-resident Indians are sending money back to India. Over $100 billion every year comes from outside into India. Indians own 60% of London real estate, but they're still investing in India. And it's the highest in the world. Even Chinese are not sending that much money in China as Indians are. So there must be a reason why. Because, UK economy is going through another churn. Last time we remember what happened in Dubai, people left their cars at the airport and vanished, right? Air India went to fetch them. So these things and global events like COVID, any such event that can happen, the comfort of a country and control will rule.
So another point that I would like to add, and probably Ganesh can add a little better, there are a lot of these global companies and the footprint in India is larger than anywhere else. Like, I think Google still, it will be largest in the Bay Area, but I think outside US, a lot of these companies, their footprint in India is larger than anywhere else in the world, which is a good indicator of what will happen in the years to come. Ganesh, would you like to add?
Yeah, I think the question is around short cycles of value creation. Dubai, 7 years ago, buildings were empty, vacancy boards completely hanging around. Today, we're all running towards it because probably it's cheaper to buy in Dubai than to buy in Gurgaon today, right? It's not about what returns it gives today. What in the long cycles will it give it, right? Gurgaon grew from a market where you could buy a house for 5-6 crores. I think there are houses going up to 100 crores today. But also in terms of the underlying fundamentals that Sanjay and Romil are talking about is a running business on top of real estate, right? Generating employment, generating tax revenue, right? Why do you think government removed indexation in real estate? They have much more foresight than what we have. They know that the real estate market in India is going to be, next 20 years, is going to be the best market to invest across the globe. And people are going to come and invest, put money inside from outside. And this is the best time to make taxes, right, from these appreciations that are going to come in. So if you think that government is removing taxation, or they're saying that, oh, we are putting this regulation around, the reason is they see this kind of a future happening. It's not happening elsewhere. If the government is subsidizing and telling you, I'll give you lesser tax, no need registration, do you think they have fundamentals stronger to get investments inside, or the fundamentals are weak that they're giving these incentives to bring you inside? So we should not run behind quick returns, and that's where you lose money. You should look at value creation and long-term cycles, because real estate is not a market you buy today and sell tomorrow, right? It needs to be investment, at least, even if you have a small SM REIT, a fund life of at least anybody investing should be around 7 to 10 years. You get a very good appreciation on it. Return apart, right? Appreciation is really good. Our fundamentals are really strong. If Kochi has done 2 times or 3 times what it was doing earlier, so you're doing something right. You did not incentivize people to come here and say that, oh, I'll give you lesser stamp duty, come and buy real estate, come and do this. You're doing something right. Your talent is coming back to your hometown. The government is being very supportive. We saw Anup sir talk about it. A lot of startups coming from Kerala today. You're doing something right. I would invest on those fundamentals. Like he said, I would invest on the 6% or 4.5% on those fundamentals rather than going for 9% with very, very weak fundamentals.
I think that answers. We'll take one more question, but before that, I think we're short on time. But quickly, just 2 fireside questions. What are the future cities coming up in India? Someone here who have already invested in Kochi has, let's say, a corpus of 10-15 crores. Maybe in priority, if you can say 1, 2, 3, which are the cities they should look at? Maybe Romil can.
Kochi is definitely one of them. Kochi is probably the fastest growing tier 2 city right now, and Coimbatore is another one which is growing fairly rapidly. There are cities like Vizag in Andhra Pradesh, Indore and Jaipur in North India. Lucknow is also doing fairly well. So these are probably the top 5-6 cities that comes to my mind.
Sure.
My view is there is also a city outside the city. So if the city is in town, but few kilometers outside, so Bangalore has Whitefield as a sub-city. Pune has Hinjewadi as a sub-city. Gurgaon has Manesar as a sub-city. Hyderabad will have Shamshabad as a sub-city. So keep an eye on those. Yeah.
I think it's everything revolves around the major cities, like you said, and then the growth around it. Because what we have found from IT companies and how the aspiration for small town children who are educating up, or tier 2 cities, tier 3 cities, always want to go to the tier 1 city initially, right? If you are probably coming from a remote village in Kerala, aspiration is to come to work to Bangalore or to Kochi or to Trivandrum. So you cannot stop that inflow, outflow at this point of time. I mean, there's no point in investing elsewhere. But if you're closer to the main cities, it will really do. Like he said, Bangalore has 5 micro markets. Each micro market has its own return. Some micro markets have not picked up, like Electronic City has not picked up, but Whitefield has picked up, North Bangalore is picking up, Outer Ring Road, Sarjapur. All these markets are picked up. So anywhere around these peripheries, if you follow the infrastructure, will be very important. So just keep following the infrastructure where it grows and start investing.
Sure. Thanks. So guys, we are short on time. I'll just take one last question. So thing is that assume, let's say, individual here has a small commercial property with him, and he has a residential which is apart from his, like a second or a third home. He's having an apartment. What do you think are the steps that he can take to increase the rental yield? Right now, giving it maybe a 1.5 crore home, 3 BHK, he might fetch around 40-45K in rent, maybe 50K, correct me if I'm wrong. What do you think are the steps? Because Airbnb right now, I understand we can charge up to 5K to 20K per night, and we can spike it up to 8-9% returns. So what do you think 2-3 steps which a guy owning a commercial can do to jack up the rent? Or maybe a resi guy, what can he do? And then we can wind up.
Sorry, commercial real estate, obviously, one of the biggest change that has happened of late is most of the occupants, they want better ecosystems, right? So it's something which at an individual level is a little difficult to do, but obviously if you have a development or a building and you can bring in certain amount of social infrastructure in the building, it really helps increase the rent these days. Tenants and occupants, they prefer to be part of ecosystems that are more holistic. So office building having a lot of F&B options, restaurants, bars, etc. really helps. So I think that is something that has really helped the commercial real estate buildings get better rents.
Yeah, I think small boutique malls do really well than the large malls. I've been trying to understand the trends of how malls happen. I think smaller commercial, which can add value to a brand, right? Even if you can get a Uniqlo in your small your commercial property, if it's on the highway, if you can just remodify it, work with people like Romil to say that I want to get a brand into my place which is on the main road or a highway in Kochi, and I want to get Uniqlo or I want to get a Nike or an Adidas. I think you should start working with consultants to find out what you want to do. The general tendency with small developments and small developers is that they're actually blindsided in many ways. I think you'll have to open up and be able to listen to it. So invest in the infrastructure again to ensure that the asset is leasable and appreciable and then properly rentable. Residential is a very tricky market to answer today, but there are a lot of asset management companies which can take, if you have 4 or 5 apartments and you have somebody sending money from abroad and you're constantly adding 1 or 2 apartments once in 2 years or 3 years, I think there are a lot of asset management companies who now can lease it and rent it out in some of these cities. Like you can buy smaller studio apartments probably in Bombay, a slightly bigger one in Bangalore, which will definitely keep going. And there will be a churn because you can't manage people leaving within 8 months, 10 months or 14 months. So these management companies will manage it. You might have to give them a small fee to manage because you might have to invest in the infrastructure that's like provide them ready-made furniture for them to like fully furnished for them to use it. So there are various ways of doing it, but residential is something going to be really particular to an asset.
Thanks. I think we'll wind up, guys. We are short on time. So thank you so much once again, Sanjay sir, Ganesh, Romil, for taking this. Daksha, over to you.
Thank you so much. And of course, they have just opened a wealth of experience and expertise for it. Thank you so much. So can we give a huge round of applause for this wonderful panel of expert speakers, and may I also request all of you to kindly accept a token of love and appreciation from our side. May I humbly request the illustrious CEO of the EduPort, Mr. Akshay Muralidharan, to kindly join with us to hand over a token of gratitude from our end to Mr. Romil Dubey. And thank you so much. Thank you so much for highlighting that every time we purchase a residential property, it is not only the emotional angles that we need to give the priority, but also the financial angles, and both needs to be balanced. Thank you so much for that incredible message to take away. Thank you so much, Akshay. You may now kindly take back your seat. And now may I humbly request the founder of Money Conclave 2024, Mr. Ibnu Jala, to kindly join with us to hand over a souvenir from Money Conclave to Mr. Ganesh Parameswaran. And thank you so much for that very beautiful message that we should not be going behind, like quick money, but instead we should be placing our priorities on the wealth creation. And thank you so much for that very valid message. And lastly, let me invite onto the stage the co-founder of Money Conclave, Mr. Aftab Shaukat, to kindly hand over our expression of appreciation to Mr. Sanjay Datt, who have underscored the point that the real estate is for the visionaries, and therefore it is very important to be cultivating the foresight. And now, thank you so much, Mr. Aftab. Now may I humbly request all our panelists to kindly join together for a group photograph. And what a great panel, what all we have listened to. The fractional ownership and this very new concept of the REIT, that is Real Estate Investment Trust. I hope it has been very informative to each one of you. May I once again request each one of you to kindly put your hands together for this great set of panels. Thank you.